Now, one of the biggest persuasive factors favoring electric vehicles over combustion cars is the cheaper running cost of electricity. Consumption has always cost a fraction of petrol or diesel up until now.
According to the Office of Gas and Electricity Markets, due to the global energy crisis, the cost of electricity per megawatt hour in the UK has multiplied by 8-folds since February on a weekly average. Recharging an electric vehicle has been increasingly more expensive this year, both at public charge points and private charge points at home. And according to the Royal Automobile Club, or RAC, the cost of pay-as-you-go charging rose by 42% since May in the UK. According to Jim Holder, the editorial director of Haymarket Auto, using premium charging networks in the UK will cost more than filling up a diesel or petrol car.
We are looking at hundreds of thousands of pounds to install these chargers. They are tied to very high energy costs. The relief for them has come through quite late in the day. So, some of them have had to be really quite aggressive in their pricing. We're hoping now that it will come down again. But absolutely, if you're using some of these premium charging networks, it will cost you more than filling up a diesel or a petrol car.
Although Holder did follow up with saying that recharging EV at home will still be cheaper than filling up with petrol or diesel.
I think what's important is that the narrative continues to take into account the fact that if you charge your EV from home, with the current caps, you are going to be paying less, almost certainly, than you are for petrol or diesel. But of course, if you use public charging a lot and that higher speed public charging, then yeah, you could be running up bigger bills.
The market transition to electric vehicles might slow, as the energy crisis may deter people from choosing electric vehicles. A survey done by AA found that 63% of the 12,500 drivers surveyed have said that the rising domestic energy prices would put them off from switching to electric vehicles. According to Holder, the real challenge for automakers is that they need to keep selling electric cars to be able to create the used electric car market. That would then be within reach of smaller budgets or lower budget families.
I think the real difficulty is that they need to keep selling electric cars in very high numbers to be able to create the used car market that would then allow electric cars to be within the reach of smaller budgets and lower budget families and households. That benefit for the running costs is receding. So absolutely, that will impact some of the benefit from these vehicles. And we have to be honest, a lot of people have prioritized the economic benefits of an electric car over the environmental benefits. And when it starts to hurt them in the pocket, they will change their minds.
Even though new car registrations in the UK increased by 1.2% in August, after a consecutive 5-month decline, the rising cost of energy prices might hinder the growth in the future.
Well, Qatar's state-owned oil and gas company Qatar Energy signed on Saturday a deal with French multinational Total Energies to join the North Field South expansion to Qatar's natural gas production capacity. And the partnership deal was signed by Qatar Energy Minister Saad Sherida Al-Khabi and Total Energy's Chief Executive Patrick Pouyanné in Doha. Now, the deal comes at a time when Europe is searching for alternative sources of energy away from Russia. Qatar is among the world's top liquefied natural gas, or LNG, exporters. The North Field South, or NFS project, which is a part of the wider North Field expansion project, will further boost LNG production in Qatar from 110 to 126 million tons per annum. NFS is already the world's largest LNG development. Now, previously in June and July of this year, Qatar Energy and Total Energies already made 5 separate partnership announcements for the NFE project that will cost around $29 billion to construct.